Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today guys, I thought that we could slightly interrupt our habit following mostly European currencies. So in recent months we have talked a lot about the Great British Pound and the Euro currency. That's why today I thought that we could shift a bit to other currencies. I take a look at the Canadian dollar. Besides on the Canadian dollar, right now we have very nice looking tactical stop. It has clear patterns and gives us the definite areas where targets stand on the Canadian dollar. Also, it has it has a relation to the crude oil, and the combination of these two markets, the crude oil market and the Canadian dollar market, so it gives us just better view on the overall situation there. So speaking on the euro currency, well, as you can see, the non-farm payrolls data really was positive, although market has turned to the downside, but its action still doesn't look really impressive, so it's not really fast. I mean on the euro currency, but particularly by this reason that the action is not really fast, I do not see any necessity right now to make any updates on the euro currency, because the situation mostly the same as we have discussed in our last video, and the same as we have talked in our last weekly research. The same is true for the Great British Pound. So it's really nothing to we could bring really new in the current analysis. That's why I think that's maybe it will be interesting for you to take a look at the Canadian dollar. So on the Canadian dollar, if you'll take a look at the high time frames, you'll see that market stands in the retracement after it has completed the all-time ABCD target, and it stands really strong support as confidence support in the monthly chart and an area around yearly pivot point. At the same time, guys, and market has formed a bullish engulfing pattern. So we have discussed it probably some time ago when we have taken a look at it last time on the Canadian dollar. On the crude oil market has completed the harmonic swing. So if you'd like to know a bit more about it, you could read our weekly research. But the reason for overall action here is on the crude oil is the completion of monthly harmonic swing. This market has turned to the downward retracement. As the crude oil has turned down, the currency pair and the Canadian dollar should turn up. So CAD should drop a bit. So the background for that is the monthly engulfing. So usually when the market forms engulfing, it takes the shape of some kind of the ABCD pattern on the lower time frame chart. And precisely this action we see right now on the daily. So take a look that we have this A, B, C bottom, D pattern. The target stands approximately at 133.85, somewhere in this area. It's very interesting the market mechanics of this pattern. Take a look that as market has completed first ABC minor 618 target. After it has been completed, market has shown retracement down. Here, some kind of the bullish engulfing, stop grabber has been formed. Another one has been formed on Thursday. It's right here. Also, take a look. This reaction to the 618 target was really fast, so market just with the 2 sessions has reached the target. And this action, guys, already is the turning to the CD leg continuation, since this is not a retracement, because all retracement has been done already. After the EB leg retracement was here, it has been done. This market has to continue to move higher. It's a bit dramatic action. This market has hit first this target, shows the retracement, and after that market has completed it. So this is retracement of the completion of the 618. So all retracement, as I said, has been done. So this is should be the CD leg continuation, and it should continue right to the target. The CD leg of action could take the shape of the butterfly, as you can see. And 127 stands at 133.33. It's very close to this one. It's approximately the same area. Also, guys, we have inner ABCD pattern. A, B, C bottom, D pattern that stands at 133 even approximately. So as you can see, around 133 stands 3 different targets, and this will be our destination point based on this analysis. Also, guys, if you will take a look at the weekly chart, you will see that 133.11 at the weekly fib resistance. So at the same time, as you can see, we will get the agreement resistance around this area. So this will be our major destination point. Appearing of this grabber, by the way, are points that probably market should take out of this step. It's just small add-on to overall bullish context here. Trend is bullish, of course, here. So on the hourly chart, if market will show minor retracement, it's probably the level that we could watch for, where we could think about taking the long position, watch for minor bullish patterns, bullish reversal patterns. We'll drop the time frame to the maybe even the 15-minute chart. If we will get some kind of the butterflies and shoulders around this area, this will be the probable pattern that you could use for possibly taking the long. So this is, as you can see, weekly pivot point, major fib level 29.90 area. It's 29.60. It's a bit far, so hardly this will be called as a confidence support. But this combination of the weekly pivot point and the major fib support should be enough. Also, guys, retracement should not be too significant, too deep. That's why we are not talking about the 129.30 area. Because, as I said, this action up here is not some kind of the retracement. This is really upward continuation. If this is really upward continuation, market should not drop right back down to these lows. Because, as I said already, all retracement has been done already. So this just could be minor bounce. So, right in the open, maybe somewhere, some tactical retracement would go to touch the weekly pivot point, for example. And market should continue to move higher if this market is really bullish. So that's, guys, our view on the Canadian dollar, because on the crude oil, we think that market really could drop to the $43 per barrel. So this is approximately $5-6 of retracement, and that probably should be enough to let the Canadian dollar to complete the 133 target. So at least currently setup looks not bad. It's probably worth of our attention. Its attractive size of this setup is the we have declared patterns, declared targets, and overall setup is relatively transparent. So it's maybe not bad idea to just keep an eye on it. So maybe it will be a nice opportunity for make the trade in the next week.